We're going to talk some pot stocks. We're going to go over the Robinhood portfolio. Then we're going to go over the M1 Finance start of that portfolio. Please, if you haven't already, hit the subscribe button, hit the like button, ring the bell, and we'll get right into it. So just some fun news to kick it off. JP Morgan Chase and Jamie Dimon have created an index to track the effect of Trump's tweets on financial markets. They call it the Wolf-AV Index after his famous tweet where he mispronounced, I forget what the word he was trying to go for, but Comfevi. My friend has that as his license plate in Colorado, so that's pretty funny. Since Trump's election in 2016, Trump has averaged more than 10 tweets a day to his nearly 64 million followers, roughly 14,000 total. 10,000 occurred after his inauguration, 4,000 non-retweets occurring during market hours, and only 146 moved the market. It's kind of funny. He likes to tweet around 1 p.m., and it's more common for him to tweet at 3 a.m. than it is at 3 p.m. Days when Trump tweets a lot are associated with negative stock market returns. So if Trump's out there firing, we're going to have a bad day. And it looks like Trump is firing as we speak. I just saw some breaking news that said he's tweeting about something. New tariffs announced in August indicate downside risk to our 2019-2020 EPS growth forecasts of +2%, +7%. Trade talks, political campaigning, and tweets have contributed to volatility from China and the Fed policy. That's pretty funny to me. I love that they're tracking that. Here it is. Trump's out here tweeting already. Trump says it's great news, activist investor involved with AT&T because CNN is bad for the U.S. Oh, God. Great news that an activist investor is now involved with AT&T as the owner of very low ratings of CNN. Perhaps they'll now put a stop to all the fake news. Oh, my God. Get out of here, Trump. All right, another fun JP Morgan news. This one is huge out there. JP Morgan and Jamie Dimon are close to winning a lead role in history's biggest IPO, Saudi Aramco. This, for all of you who don't know, Saudi Arabia's private oil firm, Aramco, is looking to go public and raise tons of funds. Jamie Dimon, the CEO of JP Morgan Chase, taking the lead on that. There was a little bit, Saudi officials who are large owners through Uber, through the country's sovereign wealth fund, were displeased with Morgan Stanley after its bankers misjudged demand for Uber, and they're large shareholders in Uber. Shares tumbled 18% in Uber on the first 2 days of trading, well below the IPO price. So that was an issue there. JP Morgan gets to take the lead. What's good for them is they'll get the lion's share of fees associated with taking Aramco public. So that's good, and it'll also help breaking into that part of the world as more companies look to go public out of there. Again, I own JP Morgan Chase as a stock. This is all just lighthearted, fun news. Don't take anything I say seriously. I'm not telling anybody how to invest. This is just my portfolio, my views on everything. I'm not like a licensed financial person or anything like that. And with that, we'll move on to pot stocks. So 3 pot stocks poised to win in Canada's Cannabis 2.0 market. We've got Canopy Growth, obviously the largest out there. We own both Canopy Growth and Constellation Brands, which is a big investor. Constellation Brands owns Negra Modelo, Corona. They're a beer producer, and they're kind of investing over here. Canopy Growth is talking about cannabis-infused beverages. They're also doing edibles and things like that, growing very rapidly. They just released a line of stuff with Martha Stewart. So a lot of good news there. Hopefully, cannabis stocks will be going on the upside. The past couple months, they've been going down. Aurora Cannabis, another huge one, largest producer, I believe, of raw biomass in Canada. I do own Aurora, doing a lot of the similar things as Canopy, growing very large. Hexo, I do not own, but it's very interesting that Molson Coors owns a piece of it. I did not know that. And they're all looking to do the same pretty much. He says that they've got some new stuff, but everybody's looking into beverages, edibles, and vape products. We'll see where it all goes. From there, the market's open. So let's see how we're doing today. We're up already 1% on the day here. We have just over $8,000 in our Robinhood account, mainly in cannabis stocks. We started this account and we're down total year to date. We're down 2,600, but we're climbing out of our hole, stupid hole that we made here. We started in January, started up a Robinhood account. We've been pouring funds into it as often as we can. Basically, when I have the itch to buy something and spend money, I just go buy stock if I can. Let's see here. We can take kind of a look at my holdings here. So I am using margin on this account. I'm looking to work my way out of margin. I'm not buying any more stocks over here. And then we're going to look at what we do with the Robinhood account if we keep it. We also have an M1 Finance account that we'll get to at some point. It looks like I have to relog in there before we can look at it. Our two largest holdings over here are Aurora Cannabis and Canopy Growth. Constellation Brands is basically another cannabis stock, and we also have one more cannabis stock, GW Pharmaceuticals, down there. So those are our largest holdings, and that's where our majority of our losses come from. We're down $828 in Aurora. We're down over $1,100 in Canopy Growth. We hope to make all this back here as the stocks climb out of their holes. We've been buying a little bit more Aurora and a little bit more Canopy Growth to cost average our price down a little bit. Microsoft is another good one, and these are what we bought at the beginning of the year. We're kind of moving towards a dividend-based, long-term, slow growth, more conservative strategy. We're also looking for equity growth as well. We do own Netflix and a few other things, PayPal, that don't pay a dividend, but the rest of the stocks, Microsoft, AMD, I don't know if they do. Disney does, Johnson & Johnson, Procter & Gamble, Verizon, Duke Energy, Visa, NVIDIA, New Residential Investments, which is a REIT that pays monthly, Schlumberger is an oil company, Coca-Cola, Annaly Capital, another REIT that pays monthly, Cirrus One, GW Pharmaceuticals does not pay a dividend, that's a cannabis stock, American Waterworks, Ingersoll Rand, Southern, Waste Management, JP Morgan Chase, Nestle, British Petroleum, PayPal, Cisco, Stepan, Starbucks, all these here pay dividends. Let's get our M1 Finance log back in here. Pull this over. So this is our M1 Finance portfolio that we started over the weekend. Oh, it doesn't fire off to the middle of the day, huh? So I guess we're just stuck here. We have estimated trades going out. I was trying to update my pie with even more stocks, but it wouldn't let me update from this original. So I guess we have to wait till the window goes through and then update our pie, and it'll rebalance tomorrow. I don't know how that works. But I'm interested in how this company works, because you can own partial shares, dividends roll over, it automates everything and rebuying. So I'm really interested to learn about M1 Finance as we go here. I'm trying to copy the same portfolio we have in Robinhood and even add a lot more to it. Since I can buy partial shares on here, I'm interested in getting Google and Amazon, Apple and Facebook and things that were too expensive really for me to get a share of. So I'm interested in that. I feel like that's the majority of the financial day today. I appreciate everybody watching the Monday morning update. Went pretty quick, 8 minutes here, huh? Let's see how we're looking. Oh, and it's gone. And it's gone. See how the rest of the market. Stocks open higher.
I know you have been sort of a skeptic in a sense that this is maybe central bank driven, that this is a market that is being propped up by sort of artificial forces, but you just look at the charts. Are the charts showing more gains ahead?
Well, absolutely. It is basically a bull market that requires central bank intervention. It cannot stand on its own. And so that's why we see so much multiple expansion in 2019 vis-a-vis 2018, because we're basically at the same price levels we were last year, but things have gotten markedly worse. What we see in the charts, however, obviously we just broke out of a
AT&T shares jump after activist Elliott Management takes $3.2 billion stake. He says he wants management to buckle down. He wrote a letter to management basically saying the purpose of today's letter is to share thoughts on how AT&T can improve its business and realize historic increase in value for shareholders. He thinks the stock can get up to $60 plus per share by the end of 2020. Let's take a look at what. Jumping. PayPal's down, Duke's down, P&G's down, Microsoft down, Disney's down, Christopher's down, Starbucks, Cone, Coca-Cola, Waste Management, Kroger's up. Bitcoin is down. Don't let that lie to you. Bitcoin is down from a high of almost 11K. We've been as high as 13 within the past 3 months. So very interesting. He's calling him he's asking him to call him. That's funny. I like their show. The old man's from Cincinnati. I don't really like him too much, but the young guy and the woman I do like. They're a little bit younger in thought and things like that. Anyway, we've been rolling on this segment now for like 12 minutes. I want to keep it short for YouTube. I appreciate it. Anybody that came out, please hit the like, hit the subscribe, hit the follow button, you know what I mean? Hit the bell for the alerts. I really appreciate it. Again, I'm not a financial advisor. I'm not a licensed person. This is all for fun. I'm just showing my accounts, my growth, or losses as we have here, and how we go from there. And I really appreciate it. I really appreciate everybody stopping out. Hopefully I have more. Thank you. Peace.